Welcome to my weekly updates in the financial markets. This way you're better prepared to do your investments and make your financial decisions. First up, housing affordability. I know everybody's concerned about the housing market. I know for me, I have my house for sale and it's been on sale on the market for maybe 3 or 4 months now. I'm getting a little worried because I'm trying to get out of here, right? I know we're all concerned about the interest rates, right? So like most people are like, they're putting everything on pause when it comes to their house. You know, sometimes, at least during the summertime, you'll have a lot of movement, a lot of home sales, a lot of people moving out, moving in. This year, not so much, right? Because of the rise in interest rates. Now, they have slightly lowered down, low for some people, but slightly lowered down to 6.58 on average. Everybody's looking at the numbers right now, and they're anticipating that we're going to have an interest rate deduction in September. So the bottom line is we don't know what's going on with housing. Right now, they're trying to go ahead and lower the interest rates. You know, September, with Fed Powell, we'll see in September what's going to happen. Now, Wednesday next week, he's having a meeting, and so you kind of get a feel of where he's going. But people are betting on September being the time that he's going to cut rates, due to so many other factors that we'll cover later. But the interest rates for homeowners, I know from me, I'm waiting to sell. But here's the thing that gives me a little bit of pause is that I really would love for the interest rates to be dropped. What my fear is that last time we had a big drop and you had like 1 out of every 7 homes were bought up by corporations. Now this time, it is going to be a drag out meat show here. I mean, probably no regulations or whatever. So when they drop the interest rates this time, my concern is that a lot of first-time home buyers, a lot of, average regular people are going to be outbid by like cash offers from corporations. Because the main goal is, for me, in my opinion, is to make most of us renters. I know like even in Georgia, a lot of new places that they have been building have been like, you can't even buy them. You can only lease, rent, right? That's it. And so they're building more multi-unit, and they'll tell you that like the single family home prices have been declining, but the multi-family home building have been on a rise because they're figuring out like we can make more money having more people just renting from us. That means that way you paying us until the day you die. Hey, ain't no more of that 30 years and then you just got to pay your taxes and insurance. No, we got to figure out a way that you're going to pay us until the day you die. So we're going to subscription base for almost everything and then rental. So that's the only thing that gives me pause when they talk about like we're going to lower the interest rates. Gosh, I wish it helped out the average person. I really do. I wish it does. But greed, corporate, that's one thing you have to watch out for, how much they're going to buy up. Now, when it comes to retail, the retail sales, I'll go ahead and read what it says. Consumers are spending, but shifting their dollars. They're shifting their dollars away from like, hey, I think I'm going to ahead and get me that Gucci purse or whatever, right? Right now, they're kind of like sticking to things that they really need or things that are on sale. And like for the Amazon, they had their Prime Day or whatever, a couple weeks ago, whatever. So, that's what shows that, Amazon had like an increase in sales because they had their Prime Day. But other places like Target's kind of suffering a little bit. I don't know why. Anyhow, but Target's suffering a little bit, and they did have a contract with Ulta. You know how we have like, I think it's JCPenney or whatever, and then Kohl's right now has it, where they have Sephora, right? And then, on the other side of Sephora, you have Ulta. So Ulta was going to be placed into the Target stores, so they'll have more visibility, more foot traffic, right? But that contract got like kinks due to Target having declining sales. So Target and Ulta, they broke up. Okay, so let's talk about marijuana because that's, you have stocks in marijuana. So right now what's going on with marijuana is that the president is looking at like taking, marijuana right now is in Schedule 1 drugs, which is like right next to like heroin and LSD, right? So he's thinking about moving it from Schedule 1 to Schedule 3, which is something that Biden has started already, didn't finish. And so now Trump is coming in and he's gonna, he's thinking about doing 1 to 3. Now, even though it goes from Schedule 1 to Schedule 3, it doesn't mean that it's not a federal crime. It doesn't mean that now every state and everything would legalize marijuana. What it does mean, because you have to follow the money, that's why we're here for, follow the money. What it does mean is now banks can like give you loans and you can get taxed on the money, because a lot of banks and everything like that don't really deal with the marijuana industry as far as like giving loans and debit cards and credit cards and stuff like that, because it's still illegal in like most states, right? But if you go ahead and take it from Schedule 1, which is like the same as heroin, and put it in Schedule 3, now you can have your banks come in, you can have, taxes and all the other stuff. So you have to follow the money, right? There's a reason behind it. So if you're looking about, thinking about marijuana stocks or whatever, I'll give you like a few that are listed as like the top marijuana stocks right now. Now, that's any decision you make when it comes to your investment, your money, you better do your own research. Now, I'm just telling you like what they got online, and you can go ahead and Google yourself. Now, there is a high approval rating for this measure, for this move, with most Americans wanting to legalize and decriminalize marijuana. But you have a conservative group who wants to like, you know what? No, we don't think, and we don't think nobody else should. Whatever we think, that's what everybody else should be doing, right? So you do have that push and pull. On another level, on another part of the news, we have the new executive order where your 401ks now can be used to not only buy stocks and bonds and ETFs and everything like that. Now, now you're going to have, your corporations coming in. Everybody want to get a little bit of something, right? It's from us, we're like always a target, right? So now with the new expansion of the 401k, you're going to have like private equity firms now involved in it, real estate and cryptocurrency. Take that for what you want, what do your own research. For me, I'm not really feeling it, but that's just me. It's new. I'm not really feeling how, I would want my 401k to be involved in cryptocurrency. It's hard to trace it. You get locked out. I just don't know. So right now, I'm still kind of like on the fence. So if you see your 401k says alternative assets, that's what they're talking about. They're talking about private equity. They're talking about real estate. They're talking about cryptocurrency. Now, right now, the market's kind of moving a lot and it was, you have your markets where it was going. We had some really, really big deeps down in the red. We had some really, really rises up to the top, right? And it's been going, like a seesaw thing. But, recently it's been kind of like a little steady moving because even with all the tariff talk and everything, I think people are having like tariff, they're just kind of over it. Right? They're just kind of like just doing what they're going to do because they don't know if it's going to come one day, not come, be changed 2 weeks later, then not 2 weeks, then 9-day pause and extensions. So the market's kind of like in the first beginning, they were like panicking. Whenever something came out, they started selling. Whenever good news, they started buying. Right? But now it's kind of like been like, they're just kind of like just doing their thing. They're just buying their stocks out. They're like, look, whatever's going to happen is going to happen. So the market optimism is basically on the chance that we're going to have rate cuts. Now, they were talking about having rate cuts like 3 times. Once in September, 1 in October, and I think 1 in December. But we'll see. And then Jerome Powell does speak next Wednesday. So when he does speak, all ears are going to be on, right? You're going to see that. That's going to be a day where you're going to see the market fluctuate a lot. Now, tech sectors continue to be 45% of your S&P, right? So if they're doing good, S&P, they're going to do good. But now the valuation of those tech stocks has been kind of concerning to some analysts. And now, some people are starting to think about pulling back with their money that they have in tech stocks. And they're thinking about moving their money. This is what the industry is thinking about doing. Moving their money now to more of the energy and healthcare sectors. They feel that has more long-term value. Because they were thinking I think they're thinking it's overvalued, right? But according to Howard Marks from Oak Tree Capital, he knows that the Magnificent Seven is not overvalued, But, a lot of other people, analysts are thinking I think it's overvalued. And the Mag 7, if you don't know what the Mag 7 is, here it is. And your Mag 7 includes things like, Meta, Microsoft, Apple, Amazon, Alphabet, which is Google, Nvidia, and Tesla. So you always want to watch those 7, right? Because that will kind of give you an indication of where the market's going to go. Okay. Now the things factoring whether or not the interest rates are going to be decreased a little bit. First of all, we had our BLS numbers, which showed that we had slow growth, for as jobs, and we had a higher unemployment number, right? But that's all going to be fixed because that person got fired now. So now you'll get the true numbers when the person puts their person that they want to give you the real numbers, because all the other numbers were fake. So once you get the real numbers, we don't see where that's going at right now. So you had your BLS numbers, and then and that showed we had an increase in unemployment rate, and then it showed that we had a decline in jobs, right? And then we had the PPI, which is your producer price index, and what that tells us how much it costs the company to produce goods. And with the prices higher, we had a high PPI, which means now comes to like who's going to suck up and eat that cost. Is the company going to suck up and eat that cost, or is it going to be the consumers? They're grappling with it. They're grappling on, do we pass this on to the consumers, right? Now, the latest consumer price index, CPI, was at 2.7% increase over the past 12 months. So with CPI increasing, PPI increasing, that's kind of slowing, like, inflation is still on the rise, right? And then with the loss of jobs and the high unemployment rate, people are banking that the Feds are going to reduce the interest rates. Now, the president just announced, like, the tariffs keep changing, back and forth. Now, the latest numbers we got right now, as of today, Friday, August 14th? I'm not sure. I'm retired, right? But the latest numbers that we got is a 300% increase on steel and semiconductors. Now, this announcement did rattle some markets, including like AMD, Nvidia, and Broadcom. So those might be things you might want to look into as well. Now, when it comes to the U.S. and China markets and the tariffs or whatever, right now we have I think the average is like 30% cap on Chinese imported goods, but the additional increase in tariffs have been delayed again for another 90 days, and so we'll see what happens when that time comes. Now, my own personal take on that is I think for the U.S., for me, my own personal take on it is we had a bustling economy at one point, and then, greed kicked in, and then these companies started sending all these jobs overseas. And then, so now, even if you call Verizon, child, you're going to talk to somebody in the Philippines. If you deal with your banking, you deal with anything, you're talking to call centers and stuff like that overseas. And then all the things that we buy pretty much from overseas, from China and everything, right? To me, that was something that was man-made that we didn't think through necessarily. We just kind of okay, well, if I can pay somebody 50 cents an hour, then paying somebody, $7 an hour, they're going to go with 50 cents an hour, even though the prices for us still remain the same. But it was going to be, to me, eye-opening is when we do. Let's say we do. I'm going to be optimistic. Let's say we do bring manufacturing back over here. You're not going to get people to work for, $5 a day. You're not going to get people who are going to, just work and turn that stuff over without, at least a decent pay, at least with some type of benefits, at least with some type of retirement plan. So that's going to cost. And right now we're already paying a lot of money. I mean, it's like $2,000 for an iPhone, right? So imagine if it was made over here. That's the part that kind of gives me a little bit of I don't know. But, I'm just a little old person here. I'm just telling you what I'm thinking, right? And my own personal take is I think it's a lot with greed, because we had a lot of this inflation, a lot of this stuff happened during, COVID. They had to increase the prices because we had the borders sitting and then we couldn't get anything in and out. But then it seems once we kind of came back from that, it's the prices never went down. And it's been going up and up and up. And I guess the companies are look, they're paying it now. I watch CNBC and I follow financial news 24/7 because I love it. I really do. And the way the analysts talk is they're not really in touch with everyday Americans, because they're always talking about well, they're still spending. Consumers are still spending. So even though we may look like we're inflationary, or it may look like we might go into a recession, they're still spending, right? So they're not even looking at even as far as Target and everything, they're not looking at the reason for their downfall. It's everybody's kind of just being I don't know what's going on. I really don't know what's going on. I just see that Target going down and then people still spending. So I think everything is still good, right? But then it's a domino effect. It's going to start hitting us, and when you look around, it's going to be too late, because they're not going to lower the prices. Even if right now if we get the tariffs and everything like that, they're not going to lower the prices, child. Them prices are going to still be going up because they figure that we still buying it. And I know for me, I used to buy stuff that I want, but right now I'm not even thinking about doing it. I'm only buying things I really, really want. I think, I think they got a flash sale going on right now in the TikTok shop, so I might have to take a dip in there. But no, on the serious side, though, I'm kind of really out of, when I listen to how the big boys talks about money, the big boys talk about money on CNBC, when I read the articles and stuff like that, it's they're really out of touch. And they don't care how much they're draining from the American pockets. They just keep trying to figure out how we can get more and more money. Even if you look around, for my husband, just to watch football or whatever, we had the football package or whatever, paying $200-$300, for the season. But then it got to a point where you're paying that, and still like some games will still be blacked out, and they still want you to go ahead and pay for Paramount. They want you to pay for YouTube TV. They want to pay for Amazon. They want to pay, and then Disney trying to get in. Like everybody, well, we're gonna put 2 games on this one, 2 games, and they'll all be paid channels, right? And it's like, okay, at some point, when does a consumer just say, you know what, we can't do this anymore? When does a business say, okay, enough is enough, right? And when you go like other places like overseas, and I do have a vlog on me being overseas or whatever, you look at it and you're like, we're not getting anything for our money. You go someplace else, you look at how much you pay for your medical, how much you pay for your food, how much you pay to get around, how much you pay for your lodging, how much you pay for your, and it's like, really? Like 1/3 the cost, and you get a lot better, and you're getting fresher food, you're getting better accommodations. Really? We just gotta step it up. We really do. Yeah, but I'm still an American. I love being American, but I just think that we do a lot of stuff backwards. We just need a whole overhaul. And this is nothing to do with Republican, Democrat, nothing like that. We just need a whole overhaul. Because right now, it's us against them on the higher ups. And the more power we keep giving them, we ain't gonna have any choices, baby. We ain't gonna have no choices. I'm retired. I have no skin in the game, but I do have kids who are in college, and I'm a little concerned about, they've been in college busting their asses, and now I'm like, okay, are they gonna have jobs? They're gonna move back home with mama? I don't know. You know what I mean? Like, that's how it affects me. They gotta move back home. But if my baby's gotta move back home, they can move back home. I think that all these adult kids, as long as they're contributing to the household, so they move back home and save your money, because we don't know where this economy is going to take us. And that's just only my own 2 cents, right? Who am I? I'm just a regular old person. Don't be saying what I'm spraying now is like the gospel. You still have to do your own due diligence and do your own research. Now, for those, like for me, the reason I watch CNBC all day and I look at financial news is because I really love, I have a finance degree or whatever, and I just really love numbers. I really love the stock industry. And for earnings, earnings are coming out next week. We just had earnings last week. We have earnings almost every week. They come out every quarter. And for those who are in options, here are your earnings coming up for next week to look at when it comes to like what you're going to invest in, your calls, your puts, your spreads, whatever you're going to do, right? Here are some things you have to look at. Earnings next week, we're going to have Home Depot, Lowe's, wherever Home Depot goes, Lowe's goes too, right? Lowe's, Target, Walmart, Alibaba, Zoom, and BJ's Wholesale. Now you have many others reporting. I just gave you some names that you may be familiar with. So it's good to know, especially if you do like options or whatever, like, earnings, because earnings, you're going to have a lot of volume. You're going to have a lot of volatility. And so the companies I just listed, they're going to have their earnings reports next week. Okay, so that's it for this week. We'll be back next week with some more financial news. All right, have a nice weekend. Bye-bye.